everyone and welcome. Today we are delving into a topic that's causing a lot of concern, maybe even a little panic among small business owners and service providers, especially in Bangalore. If you are a UPI user, you would have heard about or even received a GST notice.
No.
Yes, it's true. The GST department in Karnataka has started issuing notices to traders and service providers based on their UPI transaction data. This is impacting everyone from local tea stall owner and baker to freelancers and small service providers. Before you start rejecting UPI payments, and if you have already done that, before you lose your sleep over it, I want you to watch this video completely. We'll break down what exactly is happening, what you absolutely need to do, and what you shouldn't do so that you can navigate your GST compliances confidently and protect your business. This video is specifically for small traders, shopkeepers, service providers, and anyone like you who relies on digital payments. So why are we getting these notices? The GST department has been collecting and analyzing your UPI transaction data for the past 2 to 3 years. They're looking for one thing: businesses whose total receipts, including UPI, cash, and through other banking channels, crosses the mandatory GST registration limits. Now, what are these limits? If you are a trader, then this limit is 40 lakhs per year. For service providers, it is 20 lakhs. And if you are in a special category state or union territory, then this limit is much lower. So remember this difference. And the limit here is the total or aggregate turnover. That is the value of all your sales in a financial year, whether they are taxable or exempt. So even if you sell something that doesn't attract GST, value of such sales is still part of your turnover. GST is of course applicable only on taxable goods.
Great!
Let's understand this with a simple scenario. Imagine you run a small kirana store in Mysore. In a year, you sell 25 lakhs worth of fresh vegetables, which are exempt from GST, and 14 lakhs worth of packaged goods like biscuits, soaps, etc., which are taxable. So your aggregate turnover so far is 39 lakhs, which is within the threshold. But once you cross the threshold, you need to GST register and also start charging GST, but only on taxable goods. The key takeaway here is, it's not about how you receive money, whether it's cash, bank transfer, card or UPI. It's about your total business turnover, that is value of taxable plus exempt goods or services that you sell. And UPI is just one of the transparent channels that makes easier for the GST department to identify non-compliance. So if your UPI receipts cross this threshold, most likely you would get the notice, or probably you already have got one. So what do? First and most important, don't panic, but absolutely do not ignore the notice. Ignoring it is only going to lead to bigger problems, penalties and interest down the line. And this notice is an opportunity for you to clarify your business's position. So how do you go about it? Step 1. Review your financials thoroughly. You need to calculate your aggregate turnover for the financial years mentioned in the notice. You can check your transactions, not just UPI, pull out your bank statements, credit card swipe machine summaries, and don't forget your cash sales records. And specifically for UPI users, if you use UPI apps like PhonePe, Google Pay, Bheem, Paytm, etc., look for transactions history. Do this for all UPI IDs that you use for your business. Many small business owners mix personal and business transactions in the same UPI ID. In that case, here are 3 questions for you to find answer. 1. Did your relative send you money for a personal reason? 2. Did you receive a loan from a friend or a family member? 3. Did you get a personal gift or refund? Remember, these are not your turnover. If answer to any of these questions is yes, then gather proof, chat messages, bank statements, etc. to explain them to the GST department. Moving forward, always use separate UPI IDs and bank accounts for your personal and business finances. This will 1. Save you a lot of time, 2. Help you avoid unnecessary headache. Once you know your turnover, you can get into either of the 2 situations. Situation 1, when your turnover is within the threshold. Situation 2, when it is above the threshold. Now let's talk about the first situation. That is when your turnover is within the threshold. Then GST is not applicable, but you need to communicate this to the GST department. Draft a clear letter stating that your aggregate turnover is below the threshold. Submit all supporting documents, your UPI or bank statements, any sales registers or books that you maintain. This documentation is key. If the GST officer is satisfied with your response, then you don't have to do anything further. Now the next situation, that is when the turnover is above the threshold. This is where immediate action is required. Once your aggregate turnover crosses the limits, GST registration becomes compulsory for you. And don't just see this as a burden, because it also comes with certain benefits attached. 1. Input tax credit. And this is the big one. If you pay GST on your purchases, you can use that amount to reduce the GST that you need to pay on your sales. It prevents double taxation. 2. Increased credibility. Being GST registered makes your business appear more professional and trustworthy to other businesses and customers. 3. Business opportunities. Many larger businesses prefer to deal with GST registered suppliers as it helps them avail ITC. So you need to GST register if you want to take your business to greater heights. Next, if required, how to register for GST. The process is online via the GST portal. Ensure you register under the correct category, have relevant supporting documents, fill up the application form, and once registered, ensure to file your GST returns on time. Now let's talk about what you absolutely should not do. First, don't panic and don't stop accepting UPI payments. We have seen many businesses removing their QR codes and asking for cash only. This is a short-sighted, potentially harmful reaction, because it doesn't make your past UPI data disappear. Your cash sales are still part of your taxable turnover. You will inconvenience your customers, potentially lose business, and reverse years of progress towards digital payments. UPI is convenient. Learn to comply with it, not to run away from it. Next, don't ignore the notice. Ignoring a government notice is a serious offense that will lead to bigger penalties, interest, and legal complications. 3. Don't provide false information. Lying or providing incorrect information will lead to severe penalties. Be honest and back everything with documents. 4. Don't mix personal and business finances. This is a recipe for disaster during any tax scrutiny. Keep them separate from day one, or at least from now onwards. Don't procrastinate. The sooner you address the notice and get your compliance in order, the better off you will be. Delays only compound problems. Before we wrap up, here are your immediate action steps. Check your UPI transaction history for the relevant financial years. Calculate your total business turnover from all sources. If it is within the threshold, send a proper response to the GST officer with supporting documents explaining the situation. But if this crosses the threshold, GST register and start filing GST returns regularly. After all, being responsible citizens, we have to follow the law, because no one is above or below the law. And for some reasons, if you find doing all this quite overwhelming or even time consuming, you can reach out to a tax professional who would be able to help you register, choose the right scheme, and also draft a proper response so that you can continue to focus on your business or profession. This was all about GST notices for UPI users. Hope it was informative. Thank you for watching.